just want to check the momentum picture first, and then let's get to the analysis. Okay, so we're looking at today's 4-hour chart. This is hopefully correctly segregated. It is the same, of course, technical picture, just like with Bitcoin, but the segregation should be correct. There is a high degree 1-2 here. Level 4C is finished, divides into 3 swings or 3 waves. We had a high degree 1-2, internal 1-2. There is a 3-4 here. That is 5 into that high degree 3 in red. Now this market could be doing a wave 4 in red. So this is 5 into 3. And this correction should really be finished, but if we're doing that 4 in red, it did an A in green, that B in green is not yet finished. Evidently, from just like with Bitcoin. It is not yet finished because you're seeing this wedge. You're looking at, you see a dotted white line here and a dashed line here. This 4B divides into A in red, B in red, C in red, D in red. There's still going to be an E in red, 2144 inside of the wedge, and then the market corrects. Of course, it depends on the momentum picture. It can happen, it may not happen, but the internal segregation shows that there is an Elliott structure and that it is not really an A, B and a C up. It is still a 1, 2, 3 down into B. This B kicks down here just to throw us traders off, I think, and then moves higher. There is bearishness in equity markets back again. We sourced why this is happening. This is a bit speculative, it's just an opinion, but the current trend in the market is that the crypto asset class is closely following stocks. So if stocks are going down, you find cryptos are going down. They're both risk adverse at that point. If stocks are going up, you find that the cryptos are going up. Today, stocks are going down. I believe until the end of the week, stocks will be going down. Nobody wants to hold overnight, or nobody wants to hold into next week because, of course, of the war. So you're gonna get that 2144 in Ethereum and that 34,500 in Bitcoin. So we go live. We want to trade this. There is 1, 2, 3, 4, 5 here. This is still going to be, we sell at the moving averages, or we sell at 50% of the swing, showing here between A in white and B in white. Takes us down to 2144. At that point, we begin to accumulate into higher degree C or higher degree 4C, has of course potential to take you all the way to 3,800, at least to these dotted necklines showing here first time at that level, and then the higher degree necklines. Alright, let's take a look at what we can trade now today. Is that level, sell 2,600. This is a 1-hour chart. Okay, so we're having, this is the current swing B, that is a motive wave down. It's a 1, 2, 3, 4 and a 5. This is B here. Now this is 1, of course. This is 2. We're going to be getting a 3. That 2 most probably is not yet finished. We can still get entries at 2,670. We can get entries at maybe higher. We go live, make projections. We can take that swing. We break the neckline. We're going down to 2,144. Again, this has potential if we have a bear market in stocks continuing into next week. This doesn't only go to 2,144. Over here is that 2,144, actually top of a 1, that dashed white line. This can go all the way down to the neckline. It takes you to 1,800, takes you to 1,600. So it could be lucrative to do that short, but unless we have a stop at entry, we would not want to hold it across the weekend, because there are peace talks going on and they may actually conclude to something positive despite of what everyone thinks, and next week we may have a bullish market in cryptocurrencies and in stocks. So we don't want to be subject to such bearish assumptions. Of course, this is the current daily chart, not really updated, I believe. We are having heads and shoulders. The momentum is still bearish. Now we can go all the way down to 2,144. We're still doing a second head here. We're having 2 heads before we break out higher. We have a shoulder to the right. We'll try and test that moving average. So we know the longer term technical picture. Now we can just do the entry, and we know what could become the importance of this trade, or whether it is really important or not. Okay, so this is the wave that we are selling. This is the growth wave down. So 1, 2, 3, 4, and a 5. We expect it's correctly segregated. Now this can do a complete correction right to top of level 2 here. Best entry, of course, we think we're gonna get that 2,777 and 2,865. We could get both. The stop, of course, is just above level 2 here, 3,040, or about 3,000 even would be okay. Remember, this is a 5-wave swing, so can actually break above the bottom of level 1, and it is still corrective. There's no problem. So you want to have a stop at 3,060 or above level 2 altogether. All right, so market is a sell at 3,780, 2,865. Let us really see if we are able to get these levels. We go to 15-minute chart. It doesn't really look like we're going to get these levels. So allow us to use this neckline now because this is a tradable element. We have, of course, an extension, a bearish extension on the 15 minutes, so we don't think we're going to get that high all the way to 2,777. You would want to expect that what you're seeing here is a higher degree 1, 2. All of this is a 3. 1, 2, 3, 4, 5. This is end of 3. And the market is doing a correction 4 that should not rise above this level. Shouldn't even rise above level 1. Try to test it there. So instead of 2,777, we could want maybe to go half size at 2,660 and 2,640. In reality, this is all you're gonna get because we think also there is a pattern here to respect, which is that wedge. You're looking that you're going to be attacking that neckline at 2,500 quite soon. We already bounced there. We're 50% now between the two necklines. We're gonna fail, and it's best to enter at 2,660, 2,640 with a stop instead of having it at 3,060. We just want to have a stop at that point. 2,840. We are 2 tops above our entry swing. Let's be practical and realistic. All right, so we'd have a stop there, 2,860 instead of 3,060. Let's not be too academic and not waste the opportunity. So you just want to get short at 2,650 with a stop at 2,860, about 200 points per coin, $200 per coin. If we are lucky, we get to 2,150 or maybe 2,200. We're able to put the stop loss at entry and maybe take this across the weekend. Something can happen in favor of the trade, break down in peace talks or whatever. We can see 1,800 if we don't want to take so much risk. Anyway, we just go out at 2,200 or 2,140.